Wall Street is struggling to rebound from April's sell-off. That's our top stories today on the Wall Report. I'm your host, Greta Wall. The major indices are bouncing between positive and negative territory in today's session after the Nasdaq suffered its worst month since 2008 in April. This comes as traders are gearing up for a week of key economic data with focus on the Fed. The Fed meeting officially kicks off on Tuesday, and 99.8% of traders expect the Federal Open Market Committee to enact a 0.5% rate hike on Wednesday. The bank is also expected to begin the runoff of its balance sheet at this week's meeting. The March minutes showed the bank is in favor of a runoff of $95 billion in assets per month. And as the market prepares for that move, Treasury yields are spiking. The 10-year Treasury yield rising about 6 basis points today, sitting at 2.99%, with the 30-year yield rising 5 basis points to 3.05%. And new concerns about stagflation are looming over Wall Street as the Fed prepares to get more aggressive on inflation. Although the bank is hoping a quick tightening cycle will impact inflation quickly, a lot of the factors causing inflation are out of the bank's control, the biggest of those factors being the global supply chain. And that issue caused U.S. economic growth to slow unexpectedly in the first quarter, with the GDP contracting 1.4% as the trade deficit surged. And if that trade continues while inflation remains hot, the U.S. will be dealing with stagflation. And the extreme pace of inflation is weighing on U.S. manufacturers, which have been the bright spot in the economy over the past year. The Institute for Supply Management's Manufacturing Purchase Managers Index tumbled nearly 2 points to 55.4% in April. Now, that sharply missed expectations for the index to increase, and although any reading above 50 still signals expansion in the sector, this is the slowest pace of growth in 18 months. Respondents to the survey sounded the alarm on high prices, labor shortages, and continued issues with the supply chain. They said the recent COVID lockdowns in China have exacerbated those supply chain woes. And meantime, China's manufacturing sector is looking even worse than the U.S. The country's official manufacturing PMI dropped more than 2 points to 47.4 in April, marking the second straight month of contraction. Now, that was the lowest reading since February of 2020. China blamed the drop in factory activity on a resurgence of COVID cases across the country as major cities were put back on lockdown in April. And that slowdown in the Chinese economy is dragging down oil prices today. West Texas Intermediate crude futures falling 2.7% to under $102 per barrel, while Brent crude futures are down about 2.5% to under $105 per barrel. The economic growth concerns in China overshadowing the EU's potential ban of Russian oil imports. EU officials confirming that plan is still on the table today after talks between the European Commission and EU member states over the weekend. Now, there's not that much news happening in the market today. It's a bit of a quiet day ahead of a big week, but there is some movement, specifically taking a look at Spirit Airlines. Shares tumbling nearly 10% in today's session after rejecting JetBlue's takeover offer. The discount airline rejected that $3.6 billion deal, choosing to move forward with its merger with Frontier Airlines instead. Spirit's board of directors saying they believed the JetBlue deal would not receive regulatory approval, as it would be seen as a higher-cost airline eliminating a low-cost airline. But the board is confident its merger with Frontier will go through, as it is a combination and expansion of two low-cost airlines. Now, some key Q1 earnings are still ahead this week, Pfizer being the focus tomorrow morning, with Advanced Micro Devices, Airbnb, and Starbucks among those who will be reporting after hours. So be sure you're subscribed to my Coffee with Greta newsletter, and don't miss the Wall Report tomorrow to get the details after those results are released, and give this video a like before you